In this explainer, we're going to pull back the curtain on what really separates the pros from everyone else. We're going to walk through the entire journey of a trading idea, from that initial light bulb moment all the way to the disciplined execution that truly defines success in this game.
All right, so here's our game plan. We're going to start with a classic puzzle that every trader gets stuck on. Then we'll build out a professional framework to solve it. From there, we'll get into the right mindset for execution, expose the hidden traps of testing a strategy, and finally, we'll zero in on what a real trading edge actually is.
So let's kick things off with a problem that I guarantee every single one of you has faced. You're looking at a chart and it feels like it's telling you two completely opposite stories at the exact same time.
And it all boils down to this one simple question. You pull up a chart and you have to decide, is this thing going up or is it going down? The thing is, the answer totally depends on how you're looking at it. Okay, now check this out. On the left, you've got the weekly chart of the euro/dollar. It's in a beautiful long-term uptrend. But look at the right. The hourly chart is clearly in a nosedive. So what do? Do you buy? Do you sell? This is that classic analysis paralysis, and it's a real killer for traders.
So here's the secret. You don't have to pick a winner. They're both right. The professional move is to build a system where these different perspectives don't fight each other, but actually work together, with each one giving you a crucial piece of the bigger puzzle.
And that idea, well, that leads us straight into one of the most powerful techniques a trader can use. We're about to go from that messy confusion to total clarity, just by using a simple, structured, three-lens approach. A pro workflow isn't about staring at one chart. It's about using three. First, you've got your long-term trend chart to figure out the main direction of the market. Second, you have your midterm signal chart, where you patiently wait for your setup. And third, the short-term timing chart to absolutely nail your entry. Step one is all about establishing your bias. It's simple. You look at the big picture, in this case the weekly chart, and you see a clear uptrend. What does that mean? It means from this point on, you are only a buyer. All sell signals get ignored until this big trend changes. Just by doing that, you've already eliminated half of your potential mistakes. Okay, next up, we drop down to our main signal chart, the daily. We already know we want to buy, so now it's just a waiting game. We wait for our specific, predefined signal to pop up. For this strategy, it's a signal from the CCI indicator when it crosses above the -100 line. That's a green light, our high probability condition to start looking for an entry. And finally, with the long-term trend on our side and the daily chart giving us the signal, we zoom in one last time to our timing chart, the 1 hour. This is where we get surgical. We fine-tune our entry, maybe waiting for a tiny dip to finish so we can get the absolute best price and keep our risk as small as possible. Because let's be real, in this game, every single pip counts.
Look, having a great analysis system is awesome, but it's completely useless if you don't have a plan to execute it properly. And that plan? It doesn't start with the chart. It starts with your mindset. This is where the wheels fall off for most people.
And this really gets to the heart of it. Amateurs are constantly on the hunt for that holy grail strategy that never loses. Pros know that's a fantasy. Their edge comes from something else entirely: ironclad discipline, obsessive risk management, and just flawlessly executing their plan day in and day out. And this number? This is what that discipline looks like in the real world. Pros don't think in dollars or pips, they think in percentages. They risk a tiny, tiny fraction of their capital on any one trade, often 0.5% or even less. Why? Because it guarantees that no single bad trade can ever knock them out of the game. A system like this is the perfect example of what we're talking about. It's a simple scalping strategy, but notice how there is zero room for interpretation. The rules are black and white. It's completely mechanical. Your job isn't to predict or guess. Your job is simply to execute the plan. Okay, but this brings up a huge question, right? Before you commit to a plan, how do you actually prove that it's a good plan? How do you know it even works before you risk a single dollar of real money? Well, the standard answer is something called a backtest. You basically run your strategy on old data to see how it would have done. It's a totally essential step, but, and this is a big but, it's an absolute minefield of hidden traps and easy to make mistakes. And hey, don't just take my word for it. Some of the top minds in finance have been sounding the alarm on this for years. They've found that the vast majority of backtests, even the ones published in prestigious academic journals, are just flat out wrong or misleading. This is a massive problem. In fact,
These mistakes are so common that they've been nicknamed the 7 sins of quantitative investing. This is the list of classic blunders, everything from accidentally using data from the future to completely forgetting about transaction costs that can make a totally useless strategy look like a gold mine.
So let's just zoom in on the most famous sin of them all, survivorship bias. It sounds complicated, but the idea is actually really simple. It's what happens when you test your stock picking strategy only on the companies that are still around today, like the ones in the S&P 500, and you conveniently forget about all the companies that went bankrupt along the way.
And wow, just look at the damage it does. The top line is the backtest with survivorship bias. It looks incredible, right? A total home run. The bottom line is the exact same strategy, but tested correctly on all the data, including the failures. And just like that, the amazing performance completely vanishes. It was all a statistical illusion. So, all of this brings us to the final and, frankly, the most important takeaway. If strategies can fool you and backtests can lie, then what is the real edge? What's the thing that truly separates the consistently profitable traders from everyone else? The edge isn't a secret indicator you can buy or a magic setting. It's a complete and total shift in mindset. The amateur is always hunting for secrets, trading based on gut feelings, and falling for too good to be true backtests. The pro? They build a disciplined process, they manage risk like their life depends on it, and they demand that every single idea is proven with clean, honest data. So, as we wrap this up, I want to leave you with this one thought to chew on. A good strategy is critical. It gives you a map. But a map isn't the journey. The real edge, the thing that will make or break you as a trader, is having the discipline to follow that map, especially on the days when it's hard. That is the ultimate challenge.